Welcome on board the management of Godrej Consumer. We've got Sudhir Sitapati, the MD and CEO, joining in right now on the show. Sudhir, hi, good morning. Good to have you on the show. We've seen a bit of a confusing commentary for the rural markets in the consumption sector. How is it that rural demand and recovery has been for you?
I think the demand has been this, famous K-shaped recovery broadly continues. Demand is very good in the top 20% of India, modern trade, e-commerce. But as one goes below, we're finding demand trends are tough. Rural continues to be tough. It's a bit hard to judge it in quarter two because quarter two was a bit of a funny quarter in terms of the Indian calendar. It had an extra month of Shravan where consumption gets postponed and then the festivals were pushed by a month. So it's difficult to read into a specific quarter, and whether there is green shoots or not, I don't know. But in general, I would say that the story of rural demand being relatively tougher continues.
Sure. So when is it that we can expect to start seeing the rural recovery actually kick in?
It's a bit hard. I mean, definitely as the festive comes, October, has had Dussehra and Diwali is coming up. So yeah, I mean, when the festive comes, sales go up. But it's a bit hard to say whether this festive season marks a trajectory change in rural. That's just too soon and difficult to say right now.
Right, morning. Now, the household insecticide segment has been muted for the last couple of quarters. What is the outlook for the festive season and the second half?
No, see, the household insecticide business is probably better read on an annual basis than on a quarterly basis because it is volatile and depends a lot on weather and seasonality. Within that, I feel like household insecticide of GCPL, the performance has improved over the past, but is not yet up to potential. So I think we still have to go somewhere, and to put numbers to it, this was a business that was growing 0 to 2 volume. I now think it's growing 3 to 5 volume. What this business should be growing is 8 to 10 volume. So that's the journey we're on.
Okay, so when will this volume of around 8% be achieved?
We'll be very disappointed if we don't get this in the medium term.
Sure. Your margins also have seen a share expansion this quarter. Are these levels sustainable going forward? And will you remain at that 20% mark, or could it get higher?
I personally think that our margins should improve with time in the next 2 years. The reason being that while our core India margins are close to what we call normative margins, there is significant scope for improvement in Indonesia, Africa, and also in the acquired Raymond's business, which is Park Avenue and Kama Sutra. So a combination of these three should in fact improve our margins in the coming quarters.
Right, and regional players as well are coming back, impacting the growth and the market share. Which segments are seeing higher competitive intensity, according to you?
See, in our segment, we look at our market shares quite closely, and we have 2, 3 sources for market shares. And we have been quite positive on our market shares. So, in terms of volume market share, for example, 6 out of 6 of our top sales are gaining market share. In value share, 5 out of 6 are gaining market share. So we are not seeing that as the pressing problem. It is far more that the markets in rural India and small town India and low income consumers, those markets need to grow faster. That for us is the bigger issue rather than market share.
And the royalty arrangement that you've made with East Africa, basically those geographies that are making zero profit, what is the amount of royalty that you're expecting?
This royalty, of course, is hard to estimate, but our estimate is today we make zero profit. In FY25, we will make about 50 crores of profit. It's a relatively small amount, but at least it goes in the right direction. And it probably won't come in from quarter 4. It will probably come in from quarter 1 of next year.
Right. And what's the update on the international business, Sudhir? What's been the focus area?
I think, our priority in our international business is to get our margins right first. We have our margins right in Indonesia, and even in Argentina, actually, we have our margins right, though it gets hidden by hyperinflation accounting. But in the rest of our business, we're working in the next 18 to 24 months of structurally taking up our margins.
All right. Thank you for sharing with us those growth parameters as well as the outlook when it comes to Godrej Consumer.